All right. Good morning, guys. Wherever you are and whenever you are. All right. So we are back with another review today. I'm going to be reviewing gold, and I'm going to be reviewing. Okay, so I'm also checking the. All right. I think we're live. So yeah, I'm going to be reviewing gold, the trade that I took, and uh, actually took a loss today on gold on a winning trade. Actually, it sucks all the time, but it was a great lesson for me, and I'm gonna share the lesson with you guys shortly. Let's just get right to it. So today I mean, the trade was yesterday actually because it's now 11 minutes past 1 a.m. I'm doing this review for a trade that I took yesterday, South African time, but it is a trade that I took today if you are looking at New York time because I took the trade at 9 a.m. after 9:30. Now it's 6 o'clock New York time. So if I say today, I mean in New York time, and that's what I'm gonna be saying. So I'm gonna say the trade that I took today. Okay, just to clear things up right there. So we're looking at the higher time frame structure here. It was very easy. It was very straightforward. Um, he had so if you look down here, this is a new week opening gap this week, and if you grade it, let's go to the 1 minute. Actually, I'm gonna do this. I'm going to do this. The opening price for this candle, I mean the closing price is here and the opening price is there. So this is the new week opening gap. So let's go to 1 minute and get the opening price and the closing price of the 1 minute candle, because that is the proper way of doing it, right? So because it's a gap and it's quite a big gap, so we are going to do this. Let's get the closing price, not the high, but the closing price. Yeah, okay. We're going to grade it. Closing price of a down close candle, because you see here, this is a down close candle. Let's zoom in. This candle is a down close candle. So a down close candle opens up here. It makes the low, it makes the high, then it closes. It opens here, it makes the low, makes the high, it comes back and then it closes down here. It opens, makes the high, makes the low, then it closes down here. So I'm going to put the fib here at the closing price on Sunday, and then we're going to put the fib again on the opening price on, I mean that's on Friday's closing price and Sunday's opening price. So this is the opening price of the up close candle. Now I'm going to make it more thicker, and then we're going to go back to the hourly chart. Okay, so this is what you have, right? So looking at how the market has been moving, we are pretty much at all-time high, so the market is very much bullish. Now looking at this 1 hour, we did feel the new week opening gap on Monday, late on Monday, and then look at how the body of the candle that went all the way down, it closed at the high of that new week opening gap, and then it put in a new bullish market structure shift right here, right? So, and then it validated this fair value gap at premium by closing above it right there. Now that caused what relatively equal highs, which was a beautiful draw up in here, and that's what I was aiming for. So we're going to put this line and annotate it as the all-time highs, right? So we're going to have this line across our, this was actually my draw. Let's put the horizontal line here, and then just denote it, put ATH for all-time highs, right? So this was my draw going into this morning's trading. Obviously, I'm referring to New York time, right? We already have a change in the state of delivery here on 1 hour. So looking at 15 minutes, we had this nice fair value gap. Now, before all of this, right? Before all of this, what do you see here? We also gapped higher again today. Now, this is a new day opening gap now because it's a gap on Monday. Now, look at how the candles are respecting that as well. Now, and then this strong displacement to the upside. Now, this is a message. It's telling us that it is very sensitive, and we are still bullish, pretty much bullish, very bullish. You know, because we gapped higher this morning, right? I mean, on this was on Monday, so this is Monday's opening, and look at the candles and the displacement that came after that. So now, with all of this information, you can already see that price is pretty much still bullish. And I was bullish, you know. And also, guys, if you're trading at the market at all-time highs, you know, it's best to stay bullish. And with my model, I actually don't really need to have a bias, but this was a clean bias for me. So I said, okay, I'm going to stick with it, okay? And then now going into New York session, right? New York session trading, 7 o'clock. So I study the market from 7 o'clock and see what it does. So we open and we dump lower, right? What do? We take out the, let's go to now 5 minutes. Now, just don't forget that we are bullish and we want to get some form of sell side liquidity swap to pre-market and a nice bullish market structure shift to the upside. And then we're just gonna, you know, hold our trades until this recent all-time high, right? So now going into trading at during New York time, we take out these lows here from pre-London session, right? Early on. So we take out the sell side and then we give a nice bullish market structure shift. I'm going to do this now because this is where I was actually looking for buys. So the first time we took out we actually took out this before we hit we went back to the change in the state of delivery on 1 hour. This was my elder confluence, right? So we had this fair value gap here. So I was watching this fair value gap on 15 minutes, yes. And then there was a swing low that was inside this fair value gap. After taking out this fair value gap here, I thought, okay, maybe we are going to have a very aggressive leg to the upside from then, right? Okay, 7 o'clock opens and then no. Oh yes, this is it. It invalidates, it retests this, reclaims the PC here after taking out these relatively equal lows here, the smooth edges here. So these smooth edges, after taking out these smooth edges, now this was after 8:30, right? Because this is very important information if you don't know. So 8:30 opens, it sweeps these relatively equal lows, and then it puts in this nice bullish market structure shift above this swing high here during what? During the macro. Okay, so we take out these relatively equal lows here. Smooth edges, and guys, I'm gonna tell you why this trade didn't pan out. So this is the first trade during the 8:50 to 9:10 macro. So I was looking for an entry here since we didn't have red golden news event today. So I was looking for a setup right here. So we only retraced to just fill this premium fair value gap. So that's why my first trade, which was inside this fair value gap here, stop loss below here, taking it to this all-time high, it failed right there. Now this was not an A plus. Why? Because an A plus for me this retracement, because this is what I said on stream. I said, okay, guys, I'm not going to go in and risk the full 1% on my trade. I'm just going to scale in as I get more confirmation. For me, this trade setup, actually, I'm not going to entertain this trade, a trade like this ever. I'll have to wait for what I actually said today on stream. I said I would have preferred this candle if it closed outside of this fair value gap here, then leave a fair value gap. Then on retracement, that trade was gonna be a winner. So I completely ignored this premium fair value gap because I actually needed price to invalidate this, and then that was gonna be a win for sure. But for the fact that we even failed to close inside the fair value gap, I said, nah, guys, it's gonna come for us. So I'm just gonna leave my stop loss and see, because we have FOMC tomorrow, so it could be playful, you know. And then it was a dump, and then we took the first loss, and then I waited for a new confirmation below these lows here. Wait, let's go back. Okay. Let's do that. And then I said, okay, fine, let me wait for a new confirmation. Now, after price cleared these relatively equal lows here, okay, these relatively equal lows now, after 8:30, I have my short-term draw, which is the pre-market range highs here, and then this is my short-term draw. And it's a pity I'm annotating this on the live stream, guys, but just taking you through my thought process this morning. So I'm aiming for these relatively. Let me just do this. This is the opening, and then the opening for 9:30. Okay, let's do this. Okay, so we have these relatively equal lows. We have the 1 hour. This is the 1 hour change in the state of delivery. Okay, 60 minutes. Bullish change in the state of delivery. And then let's put this. Okay, so this is the opening price at 8:30. And then this is the opening price at 9:30. These are very important, guys. Okay, so if you're bullish, you want to get an entry below these opening prices. That's a discount. And if you are so these smooth edges, and it's vice versa if you're bearish. All right, so we open at 9 o'clock. We open for a new hour. Sorry, guys, we open here. And then what do? We take out sell side. So now how many sell side do you take here? We have sell side below this low or that low. So I'm going to count 1, 2, and then this is the third time. I also have that swing low right there. You can also do that and disregard this sell side. And then you have a 3 drivers pattern going into 9:30, and then there's a shift in market structure right here. And I said, guys, I'm not going to go in yet, because remember the first trade that we lost, we didn't wait for the fair value gap at premium to be invalidated. So I said, once we invalidate this fair value gap, then I'm going to go in. I'm going to use that as my entry, and that's exactly what happened, right? So price opens, and then we invalidate this fair value gap. I go in when this candle comes back and closes somewhere here, and then this was my entry, and then I went long. So if you check on 5 minutes, I also I think we used this in low somewhere here for stop loss. Yes, I think so. I think this was the stop loss, and on 5 minutes, I think we had a change in the state of delivery also. So everything was aligning well. Yeah, so on 5, we also had this because I also waited for that patiently. So we had a nice change in the state of delivery here on 5. And I said, okay, I'll put the stop loss below the main threshold of these down close candles, which obviously I look at the bodies here, and my stop loss is below the main threshold. So I said, no, I'm good. I also have so many PDRAs above my entry, so it should give us something now. And I was ready to catch a nice 4R. I was ready to catch a nice 4R, and then this happened, guys. And then this happened. Now, for this setup to fail, we'll have to take out this low, right? So the setup fails. Let's put this here. This is a invalidation point, right? This is the actual invalidation point down here. But did we take out that validation point? No. Gold is just as today because we have FOMC and we're trading at all-time highs. So the retracements are just too deep. So this is my lesson. If I'm going to be partaking, if I'm going to be trading on a day prior FOMC, I'm going to be trading rejection blocks. I'm going to be waiting for those deep retracement because this is very important, guys. When we opened here at 9:30, according to what I was thinking, I said, okay, I know that they have to price in some form of discount, right? But if you look at the pre-market range from 7 o'clock going into 9:30, 7 o'clock is somewhere here. We already at discount when we opened at 9:30, and the structure was already established, the bullish market structure was already established. So now if you measure from the swing high to the swing low, we were already, when we opened here at 9:30, we were already trading below the midpoint, which is the equilibrium. So I said, okay, we're already at discount. There's no need for them to now, drag it any lower. You understand? We already invalidated the inversion, so it's now for a time for us to pump. But today, that was not it. They first priced in the premium, and then a very deep discount, taking out the rejection blocks. And then after 10 o'clock, which is the silver bullet hour, they gave a new nice market structure shift after clearing, because this is the lowest they could go. Okay, the lowest they could even go to the CE without taking out this low. So that actually they did. They even went as far as the 0.75 quadrant. Let me zoom in here so that this is a very good lesson for all of you guys. Look at that. Look at this. This is not buying and selling pressure, guys. This is how you know that there is an algo. And they price in that deep discount, almost taking out the swing low, the invalidation point here. But they respect that lower quadrant. Actually, the candles, they stay at the opening, which is the rejection block. And then after this happens after 10 o'clock, silver bullet hour, they put in a new change in the state of delivery. Now, if I had only taken maybe one trade, let's say maybe break even on that trade, I was gonna go back inside here because I could see through all of this BS that gold was doing. So, and then this was gonna be the trade for me down here, and I was gonna use this invalidation as my stop loss and target the new all-time highs. Now, that was the trade that went to the pre-market, and it ended up going all the way up to the all-time highs, and that was to today's trade, and it went all the way up. Now this was going to be I think I was going to make it. I think I was going to pass because I was just going to hold for my long. I was going to have my runners go all the way up. Now this is going to be the trade for me, but I was going to take maybe 60% off here and leave these runners to run and see. Maybe close them before the market closed, because I can't hold these trades on my FTMO account, but instead, this is what happened. I was up. Okay, let's go to today's thingy, and now my winning streak is now pretty much okay. My win rate rather is now down 43% from 90, from 96 something, and then it went to I think in the 60s or the 70s, somewhere there. Now we're at 58. Now after today's two losses, it's down 43%, down to 43%. So we're now break even on the month, and how many days we have before the month ends? 1, 2. Let's not count today. I mean, yes. Let's not count Wednesday. Let's count Thursday and Friday. I'm gonna say 2 days, then the month, and let's see how much you can make in those 2 days. But yeah, this is it, and I hope this was insightful. And actually, Bitcoin had a nice trade. I couldn't participate. I couldn't take that trade on BTC because of I was already on this trade. So I was already on this gold trade, and yeah, guys, but nonetheless, it was a very insightful day for me, and I knew when I took this trade after it had filled this 15-minute fair value gap and rejected. I knew this was it. I knew this was good because look at this. I went in after even a 15-minute change in the state of delivery here, and then I went in. So this was already confirming even on the 15 minutes. So this deep retracement, it's just that I just couldn't take it because of my stop loss and my the lot size that I was using. It was too huge for that deep retracement. So I had to take an L, even though I knew this trade was gonna play out, and it wasn't gonna go below this low. Like I knew it. I knew that this trade wasn't gonna fail. And when the retracement was happening, I knew it wasn't going to take out this low here, and that's exactly what happened. So this is just one of those losses that they're not very. I don't like them actually. I really don't like them. So yeah, this is it, guys. If you want to join my daily live streams, you can click the link below. I'm going to leave a link in the description, and I do this daily on my Discord. So I do the live trades, and I'm going to pass this Pro Firm account live on Discord. So if you want to join, just hit me up, and I'll see you on Discord. Hope this was insightful. This is not financial advice by any means. It's just I'm sharing what I'm doing and how I'm making money trading gold and Bitcoin. So yeah, this is by no means financial advice, of course, but yeah, this is it was a very insightful day for me. See you guys on the next video, and obviously let me know if you are enjoying these, if you are enjoying these live streams. I'll do more of these in the future. So I will see you on the next one. So the first trade was up here, and the second trade was down here, and they all failed. So this is it. This was it, and this is how this could be the last trade for the week even for me. But I'll see how Thursday and Friday behaves after FOMC. Then I'll decide. Okay, ciao, 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 guys. See you on the next one. Cheers.